Later, you will have the opportunity to ask questions during the question and
What's
answer
going on,
session.
y'all?
You may register.
Yo. Welcome to the Hive Digital Q2 earnings report from Blackface Media under the mining pod. Colin, how are you doing?
Also, today's call
Doing beautiful, Mr. Spears. How are we on this gorgeous day?
We're fantastic. We have a few more ingredients that we've got in this live stream this time, and they have started already, the earnings call.
Hello,
It's just the
everyone.
regular
Welcome to today's
pre-introductions.
webcast reviewing Hive
But normally
Digital
earnings calls are
They
pretty
just-
boring, right?
financial results
Yeah,
for
they
quarter
just
ended
cut off
June
the
30th,
elevator music,
2024. On slide number 2,
and they're
I would
about to
like
dive
briefly note
into
disclosures.
their
Except for
quarterly
statements of
earnings and their
historical fact,
finances for
this presentation
Q1
contains
or
forward-looking
Q2. Sorry, of coururse
information
for them it's
within the
Q1
meaning of
because they use the
applicable
fiscal year.
Canadian and
Very
US
frustrating.
regulations.
But like you said, Charlie, these are
Forward-looking
usually pretty
statements
boring,
are
but we're going to
based
see if
on
we can glean anything from it.
expectations,
Hive just
and
released its
assumptions as of the date
10Q
of this
today. You
presentation.
can go find it on its
On
website
the
if
next
y'all are
slide,
interested
I'm
in
honored
looking
to
at the
introduce today's
specific
presenters.
financial
Frank
consolidation
Holmes,
for the
Executive
quarter.
Chairman,
But things I'm
President
kind of on the lookout for
CEO,
this call is
Darcy
like,
Duberis,
how did their
Chief
HPC
Financial
unit do? You know,
On the
and what
next
are the
slide,
updates
I
on
would
that? Because
now
they've been
like to
banging
turn
on
the
that drum for
presentation
over a
over
year
to
now.
Mr. Frank Holmes
And
for
also
a
just kind of
macro
seeing where
recap
they
of the
land
quarter.
with regard
Frank?
to all these other expenses
Thank
like
you, Holly.
SG&A that are
And
really
it's
starting
great
to kind of
see
harm certain
how
miners as
dynamic
their
we
margins are
and we're
compressed off of
functioning in all
halving.
these
So
different jurisdictions. From
And
Vancouver
we've got charts
to
here.
speaking
We've
for this
got
conference.
we've got
Iden
a
actually
chart
from the
overlay. This
Canaccord,
time we can, in fact,
small
Colin,
cap,
we
mid cap
can
biggest
show the
conference
chart
in the East
and
Coast.
and
listen
see
to the
how the
call.
market's
I'm in
reacting
San
in real
Antonio,
time. Although
Texas,
this is
and
markets
we
are closed,
function in
right?
9 time
Yeah,
Do we have
zones
after hours
in
view?
Bitcoin
Yeah,
mining.
I
Google
got the-
usually has
and
that.
data
I got the
centers.
after hours view
So I
right
think
here,
it's
baby.
really quite amazing how fluid this is.
All right,
But as we
so
jump into the next slide,
Frank
the
Holmes
DNA
looks
of
like he's
volatility
kicking it
is
off with a
understand the risk,
macro
and I think this is
recap.
a very important
Yeah.
visual.
Do we want to switch over to
for
and-
that?
investors to recognize
Sorry?
all these
Do we want to
external
switch over to
forces
that?
Yeah,
do
do you
impact
want me to
the
share my
daily
screen?
volatility.
I got it.
And one standard
Okay.
deviation is for Bitcoin is plus or minus
Okay,
2%.
they should be able
is
to hear it
normal.
on the
But over
screen
10
now.
days is 8%.
And I've got the chart
which
and
is,
I've
you
got
can
the
see,
call
4 times greater
So
over 10 days.
we should be
than
able
the
to
S&P
Got a lot
listen
going
to
on.
the thing. Yeah.
NVIDIA is 9%.
I mean, this is
and
this is a classic
21%, and Hive
tried
Technology
and tested
is
table here.
23%.
I don't know how many miner presentations I have seen where they compare their stocks specifically to the broader stock market and gold and
because
Bitcoin.
of external forces such as Bitcoin
Standard deviation
prices,
for 1 year as of June
geopolitics,
30th,
geoeconomic
2024.
events, which we see happen in Japan.
For every 2% that Bitcoin has moved on 1 day for standard deviation from its previous price, Hive is moving 6%.
zones, 4 languages, soon to be 5.
Hive is
We have
operating in
locations
9
in
time
Switzerland
zones.
and
9 time, yeah.
Now this really is, I will say, hats off to them. This is kind of impressive. We've started to see geographic diversification become a huge focus for Bitcoin miners. I think especially after energy prices started kind of inflating in the US in 2022. And Hive was one of the ones who really kind of led the way, specifically in the European market, as you can see there. They're in Iceland,
like 100 megawatts,
also Norway.
in Paraguay. But we were the first to go public of all the crypto mining companies in 2014.
Is that Usain Bolt?
And actually, you know,
yeah,
we
that is
launched
Usain Bolt.
We launched holding Ethereum and then Bitcoin. We were first to develop our
more
own
chest
ASIC
beating
mining
here.
with Intel, first to buy data centers.
Is that the 100 meter?
Energy focus.
Yeah,
Is he that far ahead in the 100 meter?
Yeah, dude, did you miss that whole cultural moment where he just...
Oh, no, I mean, it was just, it was like, 2012, 2016, and he was like...
AI strategy, repurposing.
But it's just crazy to think.
Yeah.
Anyway.
I'm trying to manage the levels of the call over you, so I'm like bringing it in and out.
That's hard because I'm a loud person.
No, you're good. Here we have a classic Bitcoin picture.
And I think it's really important to recognize.
And Hive leaning into Paraguay like a lot of miners. That'll be a market that's going to be very interesting to see develop because a lot of so Ande is the power authority that manages the Itaipu Dam, which is why miners are going there. It's the second largest dam in the world in terms of gigawatt capacity. And a lot of the power authorities have kind of started pumping the brakes on some of the Bitcoin miners. There was kind of like a gold rush of them going down there trying to take out these 100 megawatt blocks, multi 10 megawatt blocks at a time. And now they've kind of started slowing that a little bit. It was kind of Paraguay was kind of emerging as one of the like hottest new mining markets, and now I think it's cooling a little bit. We covered in one of our newsletters recently that like miners aren't necessarily leaving the area yet, but they're kind of slowing down the permits.
Take a look at the value metrics, and when you look at performance,
okay, this is B. Riley is covering Hive.
data centers, especially with
investment banks are covering stocks.
So if you take a
Big
look
news.
at this past quarter,
No shade for Hive. This is stuff you have to
you
tell
Yeah,
your
yeah,
investor, but it's just
Oh, we
not
get some
like.
Japan
it
carry
means that
trades,
based
yen
on
carry trade.
Oh,
valuations, data
hey!
center business
There you
that are
go.
not
With
mining
with a
Bitcoin,
with
Hive
a
is an extremely
with a
attractive
Godzilla.
to own in
Yeah.
your portfolio. Look at this volatility.
So,
From
and this
weak
is
hands to
timely,
strong
and
hands.
I guess
Understanding
they're
the yen
looping this into
Japanese
the analysis,
carry
but this
trade.
I
I've lived
assume
through
has
it
to deal with
before. I saw what it did in
the dissolving of
97.
the yen carry
I was
trade,
in
which is
Hong
why
Kong at
markets
the
melted
time,
down a week or so
when it
ago.
started to take
So the
place.
Bank of
And all
Japan
the countries
hiked
in
rates like
Asia
0.1%,
cheap money from
with a,
Ireland
and people with loans in yen had to basically cover that after the interest rate. They had to cover the margin for those loans, and they sold securities, equities, commodities, other things in other markets. They're basically borrowing yen to deploy them in assets in the West because the yen was at like 0 or -% real rates for a long time.
And you saw any asset that was speculative all of a sudden be sold down. And we saw this only 10 days, not even 10 days ago with Japan.
I'm still trying to get the
rates,
audio levels right.
and
so
the
I
carry
bring in,
trade is
the
estimated
call
to be $1
in.
trillion, and a lot of Bitcoin was leveraged in owning. And all of a sudden, Bitcoin.
Did you see all the videos of like,
wow, $1 trillion carry trade? That's
yeah,
a
did
lot.
you see all the videos of like dads explaining carry
it was
trades
incredible
to their,
last week
like their
for 4
daughters,
days. I
like
don't
the day
know if
after
it's
the yen
over.
collapse?
Historically,
It was like a
doesn't
huge trend on
end
TikTok.
in
It was
one day,
like,
but
my dad
it's just
explaining some weird
one of those
financial thing,
factors
and it's
that
like the dad
Bitcoin
like hunched over like
ecosystem of
computer
almost
screens
20,000
explaining
nodes around
the
the
yen
world
carry trade.
continued to mine and function 24/7. Brokerage firms in the U.S. basically couldn't take trades; they had shut down.
20,000 seems to be on the high end there,
It's
Chief.
continued to function, and so did Hive.
Oh look, the
we
chart turns
through
dark
this storm,
after hours.
like other storms.
Does it really?
Continue to
I'm a light
produce
mode maxi
and
myself.
function,
So.
like we do every day. Recently,
Making
we
the
were
grid
at the
disagree.
Nashville
Yeah.
Bitcoin Convention, which was
It's a
incredible
very
for many
unpopular take
reasons.
with
Yeah.
This
Bitcoiners.
event
People who
was
care there,
extraordinary. The Nashville Bitcoin
Hey, there it
Conference was
is. We got
epic. And I
Bobby
think it's because
Jr.
you have high-profile
and the
speakers
Donald Trump
participating. The conference
on
attracted,
screen
as you can
talking
see
about
here,
their talks at
President
Bitcoin
Trump and
2024.
Robert F. Kennedy Jr., and both endorsing
I gotta
and
say
supporting
the
Bitcoin
presentation
as
for
a
Hive's a little
strategic
more
asset.
playful.
And you saw
Yeah,
it's
always
global
been that way.
representation,
Yeah.
a networking
Which
Frank has
I
fun.
didn't know that. I mean,
people
I
from
didn't.
50
I thought they were all
countries
pretty dry.
showcase their global
Right.
reach.
And you know, there's
the
those
adoption
old
of
photos
Bitcoin,
of Frank
and
like
many
holding
ideas and
his
collaborations were
Oxford
taking place.
apart, and there's like
And
a
the focus
Bitcoin,
on
like he's a
Bitcoin's
superhero.
future
He has fun with
innovations.
it.
The
But
conference,
one thing I want to
it
clarify
featured
with this, and
cutting-edge
maybe this is a
discussions on the
pedantic
future of
point, but
Bitcoin.
like
And I think it was an
Trump
incredible
said that
epic
he wouldn't
presentation by
sell
Michael
Bitcoin
Saylor,
the U.S.
which took
government currently
42 minutes.
holds, but he
And
didn't
so
say
we
that he would
had
buy it.
Holly,
Yeah, that
who
was
started
like
this
that was like the
presentation
main
today.
takeaway. That
She
I
has
think a
done
lot
a
of us had.
3-minute
Yeah.
YouTube
But
summary
RFK was just
from
like, we're going to buy
the
500
time to watch
Bitcoin today.
the
And it's like,
42 minutes
whoa,
off that slide presentation
that's a crazy
by
commitment.
Michael Saylor.
The lower
and
you
I
are in the
think it's just
polling, the bigger
fantastic
your
and
claims have
informative
to
and
be.
timely.
Honestly, yeah.
Last
I mean, that
week
was
we
very
saw
reminiscent
during
of
this
Trump's first
volatility,
term, right?
Morgan Stanley on
He
the
just
next
kind of like
slide
said
says
whatever.
it is allowing 15,000
And then
wealth
I feel like he's
advisors
kind
to
of
sell
pulled it back a
Bitcoin
little bit this time.
ETFs to their
Yeah.
clients. This is all part of that slow adoption process that's significant.
We're not seeing
in
any
the
like much
Bitcoin
movement on the price yet.
ecosystem.
No.
And then we saw what really
This is
drives
not
a lot of
uncommon, but
alternative
like as
asset
you can
classes
tell
on the
from the
next
beginning
visual.
of this
The
presentation,
idea
it's
of
really
owning an
priming the
asset like
listeners to be
gold
like,
or
we're
art
still in a
from
bull
original
market.
painters,
Like,
the growth of
everything is
art like Andy
okay.
Warhol or Picasso, Prince.
Which is, again, it's
is
not
the
uncommon. A lot of
original
these
signed Prince
presentations will
has
have
gone up
timing
30,
like that,
40
where they
fold
set
over
the
time
stage for what
since
the market
the 60s
environment
and
is.
70s. And I think it's important that a lot
Okay,
of that
so we've seen a lot of the
correlation has to do with
legitimized,
money
you know,
supply.
reports we got.
And a lot of the
We've had,
original gold bugs that went
B.
into
Riley,
gold as
Morgan
alternative asset class,
Stanley,
they
brought them to
articulated this,
Japanese
and we've
carry
seen
trade.
this growth
This
in the
all sounds pretty
Bitcoin
macro to me.
ecosystem.
Doesn't sound
that
very
the
much
adoption
operations.
of young smart minds
Yeah, and that's
into
what Frank, you know,
Web3 all
they said they were going to
understand
lead
why
with
you
that
wanna
macro look.
own
I
an
didn't know that
asset
it was
class
going to
like
be,
Bitcoin. We
you know,
capped
as
at
long as
21
this is. I think this is
million
probably good
coins,
though,
and something like 93% has already been
relatively.
mined. But as the
Like
money
explaining the
supply
carry trade, right,
continues
is
to
probably important for
grow
people who
to
just saw Bitcoin
all-time
go from like,
high, that is just
was like
extremely
70 down to
bullish for
55.
the global network, for the Bitcoin global network. And as we
We
see the
got
adoption taking place,
Everyone
into-
loves
we
a good
should see
M2 money
Bitcoin
supply
trade
chart.
at much
Yeah,
higher
this is a
prices
pretty
over time.
Bitcoiner. This
But
is top
during all
Bitcoin
of this, I
content.
mentioned
This is
earlier
Bitcoin
that we,
coded,
in the
you
next
know?
slide,
Yeah.
we function 24/7.
Bitcoin
But
coded.
this
And
and
the
like
team
what
meets
the
every
fuck happened in
morning in 9
1971
time
chart.
zones
Yeah.
to make sure that the machines are plugged in. And why do we do that? Well, when we look at Bitcoin mined to the average active hash rate, we show ourselves being up there, you know, in the highest rankings, and we're very proud of that.
Ooh, I've
Now,
not
there's a
seen
couple
this
other
metric
companies that have shown up in
before,
this
but it is
data
it
set,
makes them look good.
but they're less
Makes them look
than
really
an
good.
exahash. I've not included them, or
What's
they
your
have
honest
a
thought
lot of
about this metric?
I would like to.
basically
I want to run
have
these
other
numbers
people
myself.
using their data
That
centers.
doesn't
So it's
necessarily
really
surprise
not
me because
reflective of
Hive
them
they have geothermal in
mining
Iceland, they have
Bitcoin
hydro
for
in
themselves.
Scandinavian
And that's
countries. I'm
something
pretty
that
sure
Hive
Norway. It could
does,
be Sweden.
and
Someone
we
correct me on
HODL,
that. I get
as
them
you
mixed
can
up.
see,
They
on a
also have
regular
hydro
basis, as much
in
Bitcoin on our balance
Canada,
sheet as possible.
and they're going to have hydro in
And that has
Paraguay.
had a significant impact.
And you know, this
Like I
somewhat makes sense
mentioned
because
earlier,
Riot's on the lower
Bitcoin a
end
year
here. You
ago
would
was
expect that because
30,000,
Riot, you
and
know, in
now
the
it's
summer has like
60,000. But
almost
our
50%
total position
downtime
has
because they're
increased
just constantly
substantially.
curtailing,
So that is
Yeah,
creating
and if you
wealth
look
which some
for the
people don't
long-term
like,
shareholders
but
of
like
Hive.
they're making power credits to
Ranked by
lower their costs. It's
utilization,
Yeah.
we have a
probably accretive to the
95%
business
ranking,
eventually.
and that is just
But
from
utilization.
our
Ooh, a power mining
self-mining,
analysis
not from other people
Anthony
using our
for this
facilities.
slide.
I
Ooh,
think that
they
that's
like
what's really important in
they
this
like the
equation.
powers. Shout out to our boy Anthony
And then
Powers,
revenue
power
is
mining
energized
analysis.
by petahash for July. As I said, I look at the big miners out there.
So yeah,
and
hash rate
Hive is an
utilization to me
incredible
is
number, and it's on a
can be
consistent
helpful, but like
basis
if you're not
being
showing
a
where those
leader
revenues are shorn
in
up from other
revenues
miners
that
for
are
like when the hash
energized
rate's
for peta.
down, it's not a useful
And
metric.
we do it with
Like what is
green
Hive's cost
energy.
basis
We're
compared
not
to
doing
Riot?
it with other sources of energy that are coal related, and it's been a big challenge to find reliable green energy, and that's a big reason why
Ain't that the
we
case?
said we're going to
Challenging to find
expand and double
reliable
our
green
footprint
energy.
in Paraguay because
Yeah.
we're able to source.
Well, it's funny. It's like time is a flat
competitive,
circle, right?
inexpensive,
Miners still
relative
really
basis,
like hydro
competitive
for
green
obvious
energy
reasons.
for our
It's
future.
cheaper, it's reliable,
As
it
you
usually
can
has
see,
great
ranked by
uptime.
BTC
I
production
mean,
per exahash.
it was good for the miners in
But I
Szechuan. It's good for the miners in
interesting that
Canada, right?
Marathon, who I have the greatest respect for, the company and the CEO, that their number would be bigger when you look at it. So they must have other sources of revenue showing up. But still, it really is important for investors to look at how lean our team is.
That's actually a
Having the
really
lowest
good point
G&A
because
to mine
Marathon
Bitcoin
over the
when you
last
look at
year
relative
has
market
had
caps
problems with
with
uptime.
we'll
I
go
think
into
now
greater
that they've
detail
bought
and
those
granularity about
facilities
for
from
you
Hut 8,
and how we function.
you know, they bought the
Because
Kearney,
most of
Nebraska
these other
facility and
companies
the Granbury,
function
Texas
in
facility.
one country
Um,
or just in
They're
one
no
state.
longer, they're moving
They
away
are
from the
not
hosting model. They have more
diversified,
control over their
and they
operations. A
do
lot
not
of their
have to
downtime
rely
in the
on
past has
sourcing
been
green
because of,
energy.
you know, snafus and
And
hiccups
during
with their
all
hosting
this
providers.
journey of being the first crypto mining company of September 2017 to date,
Actually, this is a
this
great
visual
chart because it
highlights
shows.
about
This is a
being
really good
lean
chart
and
because it shows
functioning,
just like
and we have
the
not,
absolute,
had this experience of
the
negative big
gravestones
losses. We do
of the
not
past
leverage
2
our
years.
equipment. We've never
Yes.
leveraged our equipment. We've not gone through the bankruptcies of many of our peers have, and we have been able to, even during the worst of
Bringing up the
times,
audio in the
when
background.
FTX blew up, we were able to come in and buy machines at great prices because we had cash on the balance sheet, and so we've already received our money back on buying them at a great, fantastic price. So this is an important visual that is not just last quarter. This is showing you going back quarter in, quarter out, year in, year out, up cycles, down cycles, Ethereum, which was a big profit center, leaving us, and how we repositioned the company and it continued to prosper. Positive corporate margin through the bear market. This is just another visual highlighting the previous one, showing you quarter over quarter
Ethereum was
what
a
we've been able to do.
fat
And
moneymaker
this
for
is
them
an
back in the day.
important indication.
And it's been one of the biggest
how we
question
can
marks
adapt
since the
to
merge
these
in September
external forces that
2022.
happen.
Like, will they be able to
So
shore
you
up
can
the
see
revenues that
here
they
that we have
lost?
about 117
Oh, here we get to the
million shares
HPC. Here we
outstanding.
go.
We've done analysis that our peers have in this time period in the past year
Got the
increased their
graphics
number of
card there.
shares out by 300%. So we have amongst the lowest G&A and the number of shares issued to attract and retain great employees, to expand and buy new equipment, to increase our global footprint. Now I'd like to turn it over to the longest-standing CFO in the Bitcoin
Yeah, Hive has
industry.
been one of the
Snapshot from
lesser
growth by our
dilutive
CFO,
miners
Darcy
in the
Daveris.
scene. A lot of
Great.
miners
Thank
over
you
the
very
last
much,
couple of
Frank.
years have really just issued
This
equity to
part
grow,
presentation, I'll be
which,
taking you
in
through
some
a
ways,
snapshot
honestly,
of the period,
I know
as
shareholders
Brendan
don't like
mentioned,
it.
looking at the
I would
most
rather them
recently
almost do
completed
that than
quarter
take on a bunch of debt,
and some
like
financial
Foresight did, and
indicators.
then have to go through a bankruptcy
We are
proceeding,
providing
right?
certain non-IFRS measures in our presentation today, and the company believes that these measures, while not
All right, now we're about to get into the
measures
meat
of
of it.
performance compared in accordance with
See what Hive's
IFRS,
growth
provide
prospects are like for
investors
the
with
rest
an
of the year.
improved ability to
And then we'll
evaluate
start
the
seeing some
underlying
shares
performance of the
trading
company.
hands with it all.
These measures do not have any standardized meanings prescribed under IFRS and therefore may not be comparable to other issuers. Further details can be found in our management discussion analysis for the 3 months ended June 30th, 2024. Moving on to the next page, I'd like to remind our stakeholders that our earnings are comprised of our operational earnings or cash flow plus our investment earnings.
I think an important thing that
and unrealized earnings,
highlighting
which
here
often includes
is that,
non-cash charges.
public miners, the market has not kind of reached consensus on the best way to value these companies.
That involves adjusting
There are a
the
bunch
value
of
an
different
asset
factors
to
at
reflect
play,
its value
and there are a lot of
as
different
determined by
metrics and
current market
ratios and
conditions.
financial,
Market value is determined based on what a company would get for the
financial
asset
games
if
that
it was
these
sold at that point in
companies and
time.
analysts like to play to value these
Market
companies. But
losses or gains
Yeah, that's one thing
are
we were talking
paper
about on the
losses
mining
or
pod a lot
gains
is like it's just
generated
very
through an
like
accounting
how do these
entry rather
pubcos
than the
differentiate
actual sale of
themselves?
the
Because
security.
last cycle there was
The
just
swings in
absolutely
digital
there were three
assets
metrics everyone paid
impact
attention
our
to, and they
paper
virtually had no
profits and
impact on
losses
like
each quarter.
no
Yeah.
impact, but they didn't really
Bitcoin
impact
digital
the
assets
actual
do
stock
generate
price a lot. They
unrealized
just
gains
traded
and
almost like
losses
beta
each
plays
quarter.
of Bitcoin.
Mhm.
It
But
is
now,
Yeah, and
that
that's
now you
investors
have like
literally
highly
it.
understand the
differentiated
differences
strategies, and
in
even almost
operating
like
earnings or
you have
losses
several different
in
core business
addition to
models, which
mark-to-market
is
paper
Mhm.
gains
huge, I think.
and losses each
Yeah.
quarter. Speaking about non-cash charges,
Obviously,
those
the
are the
biggest
write-downs or accounting
differentiator
expenses
currently
that does
are like
not involve
AI
cash
HPC
payment.
versus
Items
pure
such
play
as
miners.
depreciation,
The mullet versus
amortization,
trad miner
depletion,
thesis.
stock-based
You have
compensation,
some
and
who are
asset
going
impairment
so far
are
to
just
the
a few
extreme
of
of
the
the Core
common
Scientific saying,
non-cash
we're not a
charges
Bitcoin mining company,
that
we're an
reduce
infrastructure
earnings
company.
but not cash flows.
Then you have others, Cleanspark,
Moving
that are
on to the
saying, we're
next
just going to
slide,
focus on our
taking
bread
a
and
look at
butter.
a financial review
Hey,
during
could
this
you
most recently completed quarter
picture the financial
June 30th,
for the presentation is
2024,
up front
we
here?
recorded
It's currently covered by trading view.
million of revenue and 14.9 million profit in adjusted EBITDA.
I'm showing you
This
my
was driven
my
by a
current setup.
production
The stream
of
was
449
Okay, got
BTC
it.
equivalent mined during this most recent
Yeah, if you're
period.
watching this, we're
And
kind
to
of flying by the
remind
seat of our
our
pants here. We're
listeners, as
adding a
Frank had
couple new
mentioned,
variables each
this
time
is
to
following the April
the
happening
stream,
event
and
that
we'll
we
get better
all
each time. So
experienced. Moving on to the next
Adjusted
slide,
EBITDA,
taking a
probably
look
the
at the
most
healthy
useless
balance sheet that
metric
we
in all of
continue
Bitcoin mining.
to have. Our cash
Going back to the
position
standardization
stood
thing,
at
because they all adjust it differently.
$25.6 million
There is like
as
no,
of June 30th,
there's no
2024,
standard way
along
to
with
do
an
it.
additional 153.9 million in digital currencies, comprised
oh, we have a message
entirely
in the
of our
chat. Should we
Bitcoin
talk over the
hodl
call or
position.
not? Do we turn the
We
call up
also
or do we
had
turn ourselves
4.4
down?
million in amounts receivable and prepaids, a slight decrease from the
I
prior
think,
period.
what is
I'm
the
gonna
audience?
turn the call
The
up.
total market
Yeah,
value
you should
of
turn
our
the call up.
strategic investments increased by 118% to 15.2 million at the end of the period. We maintain a strong net cash position and healthy working capital position to fund our ongoing operations and growth objectives, with a current ratio, being our current assets divided by our current liabilities, of 7.35. Looking at the next slide and switching gears, taking a look at our gross operating margin on a year-over-year basis, comparing the first quarter as completed to the first quarter of our fiscal 2024. Our gross operating margin, which equates to our total revenues minus direct operating and maintenance costs, increased in absolute dollars to 11.4 million in the most recent quarter, compared to 8 million in the prior year comparative quarter. Gross mining margin is also partially dependent on various external network factors, including the high mining difficulty we are experiencing, the amount of digital currency rewards miners receive, and the market price of the digital currencies at the time of mining, which were on average higher than the prior comparative period. As you can see in this most recently completed period, we are reporting a net income of 3 cents per share compared to a net loss of 19 cents per share reported in June 30th, 2023 last year. Moving on to the next slide, taking our year-over-year revenue, we generated total revenue in the first quarter of fiscal 2025 of $30.2 million versus $23.6 million in the previous year's first quarter. The increase in revenues versus the same quarter in fiscal 2024 can be attributable mostly to the average Bitcoin price, which was double what it was last year, even with the ever-increasing Bitcoin difficulty hash rate over the past 12 months. As mentioned previously, our gross mining margin, which equates to our revenues minus direct operating and maintenance costs, increased in absolute dollars.
Quick perspective here with regards to our revenue. From the miners that we have so far, Riot had 70 million last quarter, Mara had 145 million, Core had 141 million, Cleanspark had 104 million, and Bitfarms had 42
Turning
million.
to the next slide, comparing our current fiscal Q1 quarter to the previous Q4 quarter, we generated revenue in this first quarter of $30.2 million versus $36.9 million in the previous quarter. As has been talked about previously, this decrease in revenues versus the prior quarter was impacted substantially by the April halving, leading to less Bitcoin produced, and this was partially offset by an increase in the price of Bitcoin. Our operating gross margin, also in absolute dollars, was $11.4 million in the most recent quarter compared to $16.3 million in the prior quarter comparative. This decrease in gross mining margin versus the prior quarter was negatively impacted by the halving that took place early in the quarter. As we continue to talk about, we have been extremely strong in our operations, but as a result of the halving, we have been able to adjust, and we've done a very good job of that. Looking at the next slide, our adjusted EBITDA in this first quarter of fiscal 2025 was $14.9 million versus an adjusted EBITDA of $16.2 million in the prior quarter. I will highlight again that adjusted EBITDA is a non-IFRS figure. In the first quarter, we experienced a net income of $3.3 million compared to a net loss of $3.5 million in the prior quarter. I want to again thank our loyal stakeholders and shareholders that are listening. And this time, I'd like to turn the presentation over to our President and CEO, Aydin Kilic, for an executive update. Aydin?
Thank you for that excellent summary. It has been a solid quarter, and we're going to start off actually by looking at our production of Bitcoin over the last 12 months. So we have mined almost 2,600 Bitcoin with green energy over the last 12 months. As Frank and Darcy both mentioned, this is the first fiscal quarter for all of the public miners.
What are they mining with their GPUs still?
And as you can see here, we've delivered solid and consistent production since the halving. 119 Bitcoin in May, June, and 116 in July. And this is a time when we've seen difficulty really maintain high levels in the 80 to 85 trillion range. And how we continue to have consistent production is we had new machines coming in from our S21 and S21 Pro orders to reach our target 5.5 exahash install. Now, I do want to note, and we're going to start talking about this more, we are in a bearish cycle of crypto mining. It's obviously post-halving. We're seeing difficulty actually as of this last epoch, all-time highs at 90 trillion. And so what that means is we're in a bear cycle where you really want to manage profitability and have the best unit economics. So we're actually now operating at about 5.2 exahash, where we've improved the efficiency of some of our older machines by firmware optimization. And there's a very good reason why we do this. And that's on the next slide. Profit. Another quarter with positive gross mining margins. As you could see, this is $32 million of revenue this quarter with $11 million of gross mining margins. So add another one to the chart.
They're
I think
starting
next
in.
quarter we should have a slide that shows, Hall of Fame jersey hanging from the rafters. So I'm not aware of any other public crypto.
I mean, look at how
mining
high their mining margins
profitably
were
over
when
the
they were
last
mining
2 years.
Ethereum, though.
And so the reason why we're so meticulous
And you can see
in how
it,
we manage our
you
hash
know,
rate, our firmware,
you can see it
and
drop
we are
off.
extremely analytical, paying attention to hash rate economics and also energy markets. Again, as Frank mentioned, we hedge markets in Sweden, etc. This is how we have a multifaceted strategy to deliver quarter over quarter positive gross mining margins as a public company. And right now,
I don't
we
understand
are
why they
in
have the
the
Ethereum
$40
over
hash
Q2
price range. So we're
2023.
all-time low for hash price.
Merge happened in
Post-halving, we're in
2022.
the $45 to $55 per petahash per day hash price range. And what's interesting is you'll notice our mining margin was actually better this quarter than it was in the winter of 2022 bear market. And the reason why is because this is more of a macro commentary now for the Bitcoin mining industry. We have the new generation S21 and S21 Pro machines that exist in this post-halving era that are allowing miners to generate better revenues on a dollar per kilowatt hour basis compared to the mining economics in late 2022, which were in the $50 to $55 per petahash per day range. But back then, the best machines on the market were just the XP and maybe the K Pro. And so what does that mean? So you look at the advent of hardware innovation. And so we have machines now that are in the 15 to 18 joule per terahash efficiency range. Whereas a couple of years ago, the best machines, which weren't that prevalent, by the way, right? Like the S21 XP was very overpriced. Those were in the 22 joule per terahash range. We bought a bunch of K Pros. They were phenomenal. $11 a terahash, 23 joules a terahash. And so, that's just a little bit of, some of the notes of how we would hit these cadence.
Yeah, last year, Hive bought 2.6 exahashes worth of
that's on the
S19X of S19X K Pros and S21s.
This is corporate margin.
1.4 exahashes of S21
well.
and 1.18 exahashes
works
of
very
S19
hard
K Pros.
in order to realize the numbers that you see here. Corporate margin is our gross operating margin minus our G&A as a public company. So as a public company, we have a lot of different costs. As you can imagine, there's all the executive comp, there's travel to go to conferences, sponsoring
Theoretically,
conferences,
if you're a shareholder,
investor relations,
this is the trade you care
marketing,
about, right?
lawyers, auditors, directors of offices.
Yeah, one of many,
There's a
but
lot of
100%. Like,
we have at Hive Digital,
no one wants to look at
G&A per
the
Bitcoin
company they're invested in this
Full
arena
stop.
just blowing
And
through
so
money
what you
on
have
selling general and
is
administrative.
a
Right?
company that is
Actually been
still making money
one of the problems with a
fundamentally
lot of miners in the past
after you
is that their
subtract these
SG&A
corporate
has
operating
been
cash costs,
several
and
magnitudes
this
more
quarter
than
we
it
did
should
$8
be.
million.
When you look at the
Right,
revenue,
and so
for
year
some
over
miners,
year, by the way,
certain
we're
quarters,
up
it was
about
as much as
60%, right? A year ago, it
which
was
is insane.
5.2
Like a
million
healthy
corporate
ratio
margin.
for that is,
And so we believe
for a
that
tech
by
company,
having low
for like a
G&A
high growth
for
company
Bitcoin
like
mining,
this,
and by the way, this
20%,
applies if you go back those 3 years, we've had
and
positive
the
corporate
20.
margin over the last 3 years as well. We believe this gives investors the best access.
And for
Bitcoin
clarity, for anyone who doesn't
as an
know,
asset
SG&A,
class,
and they're
almost
specifically doing
functioning
G&A,
like
which is general and
gold
administrative. It's
royalty
basically
stream
looking at
fund, which is
administrative payrolls,
Frank's vision when
or
he really
management,
founded Hive.
other general
And
spending
so, strip away all
that's
the
involved in
unnecessary
payroll
bloat, have
for
a
business
high
operations.
octane,
We're also selling,
high
so things like
horsepower
marketing
machines,
expenses and stuff like that. There's some revenue
consistently
included.
we're ranked with having the best hash rate utilization in the sector, green energy, globally diversified, low operating costs.
Yeah,
This
their
is how you
general and
have a
administrative
high-value company,
for last
not just
quarter was
looking at it through the
3.4
lens of
million.
Bitcoin mining stock, but really just as a
Very
company with
low.
great fundamentals.
And if you couple that
if
with
you
accounts payable
hop
and
to the
accrued
next slide, you
liabilities,
can look at this same
which was 10.5
ideology
million,
through a more accounting-focused lens.
you're basically looking at like
This is all for
14 million
the
there
analysts out
for
there.
payroll
super
and
solid quarter,
D&A.
$14.9 million of adjusted
And
EBITDA,
for reference,
and $18.8 million of EBITDA. Now, if you tally that up for the year, what that works out to is an adjusted EBITDA of $47 million for the year and an EBITDA of $40.
for reference, Riot's SG&A was 61 million,
So
Mara's
these are
was
great numbers,
57,
and
Core's was 29,
it's been another
Cleanspark was
solid quarter.
29.8, and
Knowing
Bitfarms
how
was
we're
12.4.
performing on an adjusted EBITDA
Well,
basis,
Hive,
which is
and this
a good
makes sense given their size, they're
apples to apples
in that
comparison
Bitfarm kind of
amongst our
bucket with
peers,
regards to
because
their general and administrative costs.
some companies have different ways that they book
They're
non-cash
a little
charges.
bit
We try
smaller
to
than
look
Bitfarm,
at
right?
the business of how are you operating on adjusted EBITDA, or at least that's what the analysts look at. And on the next slide, these are just the companies that have reported to date, right? So some companies are still going to report in the next couple of days. But for now, you could see that we are trading at an enterprise value, which, by the way, as of last Friday, August 9th, when we updated all the data, our enterprise value is only $154 million. Why? Well, our market cap is $300 million, but we're holding about $150 million of Bitcoin on the balance sheet. So when you look at that enterprise value of $154 million, and you realize we did $14.9 million of EBITDA, adjusted EBITDA for the quarter, that's almost $60 million EBITDA annualized. That means our EV to adjusted EBITDA multiple is only 2.6. Now, first of all, that from first fundamentals is already attractive. But when you look at where our peers are trading, upwards of 10, 15, 20x and more, we are an absolute bargain. So why is this? I get asked often. I think it's because our office is headquartered in Vancouver. So having the U.S. address is very important for getting indexed on the Russell 3000, et cetera. And I think a lot of our peers spend a lot more money, which we could see from the G&A expenses on marketing and hire and PR. You know, we're very proud of what we do. We do think, you know, we go to the conferences, we tell the story, we meet with retail investors, institutions, et cetera. But, you know, nevertheless, we believe we're trading at a discount to our peers, and that provides a great opportunity, in my opinion. On the next slide, we look at EV to annualized revenue. And this is even more, what's the right word here, attractive, maybe even mind-boggling. With $32 million of revenue for the quarter and an enterprise value of $154, our EV to annualized revenue is 1.2x. Again, an absolute bargain when our peers are trading at 2, 4.
So what Aiden's basically showing here is that
again,
he believes that Hive is incredibly undervalued. You can see that EV annualized revenue ratio of 1.2 compared to, I mean, that's like, 3 times less than the next one Bit Farm. Well,
I'd love to be at a higher multiple. And
it is 3 times less than Bit Farm.
That's a nice place to be, I suppose.
And, there's reason for that as well. Hive is much slower to grow.
So we're trading at a great
basically every other
miner. So I think the only way it should go is up. So now, if we look at the next slide,
the market really is pretty simple. It rewards high-paced growth of these Bitcoin
for the next year. So we've signed a PPA in Paraguay for 100 megawatts.
More on Paraguay.
And with S21 Pros, this would add another 6.6 exahash to our 5.5 exahash installed today, which would bring us to 12.1 exahash. And by the way, our efficiency globally, if we were operating at 12.1
interesting timeline for this, though. Notice Q3 2025 completion.
Today we're at 24.5. So that would give us.
Yeah.
But, I mean, we already
cash price going to be at that point?
Fleet of ASIC
like $10 per
terahash basis, which again, for all the enthusiasts out there, the better your efficiency on a joule per terahash basis, the lower your cost of Bitcoin.
And what difficulty transactions.
So this again would take us to 12.1 exahash and a global fleet efficiency of 19.3 joules a terahash. So this is very exciting. Our target is Q3 of 2025. And by the way, our team was out.
For reference, Hive started out with 4 exahashes of computing power in January.
Right, so dedicated substation. So we're really excited. The other attractive thing there, of course, is green energy. As Frank mentioned, it is much tougher.
That's what 100 megawatts is like, everyone.
Scale than if you just
are
willing to get grid mix or carbon emitting.
Lot.
And so
substations.
A very compelling and exciting merit of our site in Paraguay is that we expect
doesn't that kind of get you fired
Bitcoin production to be about $22,000 with new generation equipment at the site on a quarter of the low power cost. So very exciting. A little bit more color. We'll be providing more updates in news releases to come. On the next slide.
Yep.
A little bit more commentary on the post-halving mining economics. So again, we've had solid production over the last 3 months. We're showing July here as well. Again, the interim year end was June 30th, but we included the July production report as well. So Our installed hash rate is 5.5 exahash. We received all of our shipments of S21s and S21 Pros. In total, those are 9,586 that have been installed from January through to the end of July. But as mentioned, we are operating our older machines, our 30 joule per terahash machines. We've actually downclocked them to go below their rated operating efficiency and improvement to have better profitability and better unit economics. And again, when I showed that slide that we've been mining profitably for the last 3 years, how we do that is we're very analytical and very granular on how we manage our ASICs. We're constantly looking at hash price, starting with our electrical prices at every facility relative to the break-even price of each machine. Can you improve the break-even price of that machine by adjusting its firmware? If you can,
this is
absolutely
one
do
of
it.
the first times I have heard firmware mentioned in a presentation.
All our site captains, everyone's down.
And I think it just goes to show that
so that's how we function like a
we're
well-oiled
really
machine.
undergoing like a
Next
kind
slide.
of growth spurt for the market
So
in
this
terms
is
of
big news. This is
maturing
great news. We have
operations
grown our
and maturing
HODL
strategies for these
month-over-month
public miners.
since the halving, which I think is
You know, we're not in the
remarkable.
days
So
where
we're at
back sort of kind of mining band, miners can just throw a bunch of S9s on a rack in their main and call it
energy. Again, it makes us have an incredibly attractive enterprise value of only about $150 million. And on the next slide, a quick update, but a great one on our milestone. So we reached $10 million in annualized run rate revenue. Everybody was $2.6 million for the quarter.
All right,
Which
this
of course,
is
would be $10.4 million.
this is what
for
people want to
year on annualized
That's a
basis.
crazy
It was very
chart.
exciting.
250K
We
quarter,
broadcast
250K a
this would
month,
be an
250K
interim
a week.
target of ours
Yeah.
in some of our earlier press releases describing the growth of our AI business using our NVIDIA chips. So we have over 4,000
What's the
NVIDIA
timeline?
A-series cards, the A4000, A6000, and
The
5,000
3D
which are
bars
running in tier 3
because
data
their
centers.
GPUs,
In
which
addition to
can
that, we have
render
96 H100.
more
So
computationally
very glad
expensive
that we
slides.
reached this
Right.
interim milestone of
Did they
$10 million
mislabel this?
annualized run rate revenue. Our
Yeah,
target
that
for
should say
the second
Q1
half of this year is still
2024.
$20 million. And our target for
because
next
on their
year, which is our blue
on their
sky,
reporting, they
is
reported 2.6
$100
million in
of
revenue for
annualized run rate
HPC
revenue from the
services
AI
this
business.
quarter,
How are we going to get there? Stay
compared
tuned. We
to
have some really exciting
221,000 a year ago.
announcements.
So
We've been
definitely
very
seen some improvement.
diligently pursuing expansions and procuring opportunities for having the absolute best GPU hardware available on the market for the next generation. And so we will be providing the market more color on our plans for the second half of this year and 2025. So stay tuned for more. It's been a great quarter, and we look forward for more to come.
Thank you, Mr. Kalik. Ladies and gentlemen, at this time, if you would like to ask a question,
Not
please press star
much
1 on your
on
telephone keypad.
the
And again, you
AI
can remove
front.
yourself from the queue by pressing star 2. Once again, it's star 1 for questions.
So what are we
We'll
going
go
to
first this
do now
afternoon
that we
to
just
Mike
have the
Colonnese
question
at
slide?
H.C.
Is there something
Wainwright.
else we
Mike,
could
please
put
go
up, do you
ahead.
think?
Let's see
Hi,
what
good
let's
afternoon,
take
guys.
it
and
question by
congrats on signing
question.
the
If
new
there's
site
something that we
in
can kind of
Ottawa.
riff on with the
Great
data
to
that
see
I have in
that.
front of me, we
Couple
can
for me. First, I'm curious,
pivot.
which site
No
will you
problem.
guys be converting over to HPC from Bitcoin mining? And what will be your strategy for the 20 megawatts? Do you think you'll purchase and deploy your own GPUs as you've
Great
done in the past,
question.
or will you focus more on a co-location model here?
Hi, Mike. It's Aiden here. I'll take that one. Just want to make sure. Can you hear me okay?
Yes.
Okay, excellent. I'm just dialing in from Boston. So the sites which we are building for New Brunswick, and then one of our sites in Bowden. So these are, all of our facilities are data centers. New Brunswick
Bowden,
in particular,
Sweden.
and Bowden. Bowden used to be a
New
GPU mining
Brunswick,
facility,
Canada, obviously.
and our facility in New Brunswick is what I like to call a military grade data center. So it's you've got a structure there, you've got great bones, and of course all the power distribution from high voltage down to 415 volts has already been done. So it's a matter of adding UPSs, chillers, generators, etc. Everything you need to get to tier 3 uptime. And the nice thing about the retrofit is a lot of the long lead time items are on the high voltage side. And so a greenfield, just in broad strokes, might take 2 years. A retrofit is more in the 9 to 12 month range. And so the CapEx on a dollar per megawatt basis on a retrofit, you're looking at more in the $5 to $8 million
That's a
per
wild
megawatt
thing.
range, whereas
Is that
in
true?
a greenfield, you're more in the $10 to $12 million
Retrofitting takes less
per
time than
megawatt
just
range.
building it from the ground up.
So that's
I
that.
would have thought that it would be similar.
Great. No, I appreciate the
I mean, you
color,
already have
Ivan.
the
And, you know, as
electrical
far as
infrastructure,
the
but you
go-to-market
have to supplement,
strategy
I would
there,
imagine. And there's a
do you
bunch of
think
other
you'll
cooling
fill that
power
capacity up with self-owned GPUs as you've done previously, or do you think you'll take more of, again, that co-location model approach? And how should we think about the unit economics there?
Oh, right. Yeah.
If we have any data
So,
center
just to put
professionals
into
or other
context,
miners
like,
who are looking into HPC that could
one,
verify whether or not a
like,
9 to 12 month timeline for
using
retrofitting
the
a Bitcoin mine to
H100
become a
as an
tier 3 data
example,
center is
in
realistic,
broad
we would
strokes,
love to
it's
hear.
about $30 million a megawatt to populate, right? So it's very CapEx intensive. And the other ratio that's important to consider is that when you're building tier 3, you have PUE, power utilization ratio. And so if you have 30 megawatts of power, you're going to end up with about 20 megawatts of IT load or compute. Whereas in crypto mining, if you have 30 megawatts of power, you're going to be using maybe 29 megawatts for mining. There'll be very little ancillary overhead. So with 20 megawatts, right, and $30 million, that would be approximately $600 million. Again, in broad strokes, there's obviously Blackwell architecture coming out next year. There's H200s coming out in Q4. I'm just talking about giving a high-level understanding of the economics of it. Now, it is, of course, attractive to purchase and operate your own GPU cloud because that's how you realize those $2.50 per kilowatt hour revenues when you're renting out H100s. On the colo side, we are seeing that rates could be anywhere from 25 to 50 cents a kilowatt hour. So there are two different business models akin to mining crypto, where if you offer hosting, margins are thinner, they're more stable, it's more of a long-term ROI. Whereas if you're self-mining, there's
For
more
reference,
CapEx
everybody,
involved, but
the
you can
average
realize
residential
potentially
cost
quicker
of power in
ROI
California is like
based on
35
crypto mining
per kilowatt
economics. So I think it would be a hybrid, and we would want to bring the capacity on.
So you can see when you hear figures like that, why all of these miners are like, let's move from this razor thin margin business
GPU, so we do
into one with fat margin.
Expand that.
That also carries this
But
kind of
20 megawatts
investor
is a
hype
lot of
momentum currently.
CapEx to fill up with GPU. So we're evaluating the most accretive path forward right now.
Got it. Thank you for taking my questions.
Yeah, it is.
I just wanted to add, Frank here, if you can hear me.
Hey, there's the block space.
We're about an hour and a half to 2 hours from the capital driving, Valenzuela, and it's a nice, beautiful green town, and we're so impressed with the infrastructure and the ease of being able to drive there. We took a chopper and visited all the other sites, and a lot of them were just too far away for our initial. We wanted to be able
Glowing
to
praise for Paraguay.
drive and make it very functional and easy to build.
Got it. Great to hear from you, Frank, and congrats again on the Paraguay site.
Thank you.
Thank you. We take our next question now from Lucas Pipes of B. Riley.
Thank you very much, operator, and good afternoon, everyone. This is Fedor Shebelin asking questions on behalf of Lucas Pipes. And my first one is on your new third quarter 25 target. How should we think about cadence of deployment here? So is it going to be skewed towards the end of 2025, let's say quarter towards 2025, or it's fair to assume a gradual ramp up? And where things stays on financing side of this expansion? Just how much do you plan to spend on this 100 megawatt data center this year and maybe in 2025? If you can just provide additional color here, would be great. Thank you.
So we haven't disclosed the exact capital outlay plan. However, it is extremely attractive on a dollar per megawatt basis in Paraguay. And why we chose Paraguay was threefold. The attractive dollar per megawatt build out cost for us to complete a 100 megawatt site. the low cost of power, and of
So
course,
Aiden
the fact
kind
that
of
it's
like
green energy at scale.
equivocating here.
And so those three.
He was basically just asked, like, what's the
Paraguay,
deployment schedule going to be?
exciting,
And he's
and
jumping into why
we will
Paraguay is
be
a great place
providing the
to
market
mine.
more details on capital allocation
It's like, you know,
and build out costs,
I get it.
et cetera.
You don't
as
want
the
to say
project
things
moves
if you don't know for sure what's going to happen, but
Thank you, Aiden.
like kind of the problem of like saying you're going to
regarding
deploy all of
cadence,
this hash rate instead of doing it.
is it fair
You know, I
to
think
assume
that was
gradual
always
ramp
a
up
huge
from now to
strategy back in like
all the way
2021 and
to
2022.
third quarter of
Marathon would
2025?
they would basically say their projected,
Sorry, is it fair to assume
target for hash rate
How
was
should
some
we think about
absurd
ramp
number
up
that was like triple what they currently had, and they never
hash rate?
targets. I think miners have gotten a little
Yeah,
bit
so,
better. The market is much
mhm.
more mature than it was 3 years ago.
typically, in the first 6 months, you're doing high voltage and substation work, and you'll bring on, capacity in that second half, perhaps in the third quarter of 2025 is when we would expect hash rate to start coming online.
Gotcha. Thanks for that. And my second one is on AI cloud progress.
So Aiden basically just said that for that 12.5 expansion plan, 5.5, majority of that's going to just come online on Q3 of next year.
Then you start putting in equipment to start.
Which if that's like, if all of the expansion, if all the 7 megawatts or the 7 exahashes that they're expecting from that Paraguay expansion
6 months
is just in Paraguay, you have to wonder, like, do they have plans to increase hash rate anywhere else?
We will start.
Or are they just going to focus all of their development on this site specifically and maybe try to
Gotcha. Thank you
really
very
flesh
much.
out their
And my second one is on AI cloud. So with respect to this Paraguay expansion, will it affect your plans on
Hive,
purchasing
I would not
latest gen
be very happy with hearing it's going to take
for your
near
AI expansion?
exahashes to come online when the rest of the network is like kind of at a blistering pace ahead of you already,
Mike,
right?
Earlier, who has some great
I mean, like
questions.
Riot
Those are actually
turned online like 10 exahashes this quarter, last quarter.
Conversion opportunities are actually in New Brunswick.
Oh shit, is that the stock price?
Yeah, dude.
Sweden.
Okay, investors seem to like it.
And so these have a 6
Hive
to
jumping
12 month
from 284 to
construction
296 after
timeline
hours.
on a retrofit. And
The
so
investors
if
like
we were to
it.
purchase, which we've talked about, we've been very carefully going through an engineering procurement exercise for next generation GPU compute, it would go to those locations. And currently, 100 megawatt allocation in Paraguay is forecasted to more than double the Bitcoin mining capacity from 5.5 exahash to 12.1 exahash.
And I think just to add to that, once you explain about
The 12.1, I
this
misspoke
continuous
earlier.
process that we're spending every month.
But the point still
and
stands. They're
taking
basically
equipment that's for
betting
delivery
on
immediately
using this
and
well,
upgrading
betting
the
is not the right
suite,
word.
lowering
They're
our
putting all
costs,
their chips for
and
doubling
then
their hash rate
improving our
on
exahash.
Paraguay
We have
mining farm.
and I like the best example is that I'm in South Texas, is like oil and gas.
Do people
and
even
gas,
care
and you're
about that
drilling,
anymore?
And you're fracking.
If
you
you're
be
talking
drilling.
about AI
So
and
we are
HPC
always
strategies, do they
upgrading our
do they even
suite
care
of
about the
HPC.
mining anymore?
And I think that after we've completed our spend, it'll add with the new, more efficient machines. Aiden, is it about 1.5 exahash?
Yeah, that's right, Frank. So we have our global fleet average is 5.5 exahash installed with an efficiency of 24.5 joules per terahash. That constitutes, pardon me, approximately 8,000 30 joule per terahash machines. If we upgrade those 30 joule per terahash machines to S21 Pros, that would yield an additional exahash and bring our average efficiency down closer to approximately 22 joules a terahash. So that can be the upgrade within our existing facility. And by doing 5, we always like, as Frank mentioned earlier, we like to have capital performing. So when we order machines, it's for immediate delivery so they can get plugged in. We seldom, if ever, do large machine orders where they come in, 6 months later. we like to have rolling, if not immediate, deliveries of ASICs. So we always target a 1-year ROI. Now, of course, that's variable. That stretches out a bit in a bear market, but it also shortens a lot in the bull market. So our whole business model is based on cash flow, return on invested capital. So we see it as a success if the ASICs we've purchased, or GPUs for that matter, when we run them.
He said 22.4, right? For their
have you
efficiency
made
currently?
a profit? Have you made a
Or
handsome
24.
profit
He said 24.
in the time that you've been running them? And if you even sell them,
I don't know,
sometimes on the
actually.
secondary market, you can add
So,
that back. And one
using
golden example,
electricity
like
costs
in
that
the
I
bear
have
market
for
of
them
2022
for
is
the end of
we
year
bought,
2023,
J Pros,
which are outdated,
19 J
I know,
Pros
so please don't
for
get mad at me
$10 a
anymore.
terahash.
But using
And
those
even in that
2023
bear
end of year
market,
electricity
because we
costs
got them
versus
for
that
such a
24
great
joules per
deal,
terahash,
they had fully
that
repaid
puts their
themselves
current hash
off
cost at
in a year,
$41.
and
And hash
continue to
cost, for
free
everyone
cash
knows,
flow
it's
after that.
basically
So
a counterpart
that's
to
sort
hash
of
price.
the
So when you say hash
methodology of
cost, it's
how we
how many
upgrade the
dollars per
site.
day
We don't
does it cost
necessarily
you
do
to run a
massive
petahash?
orders. We're
So it costs them
constantly evaluating the
$41 per
landscape.
day,
Yes, we talk to
based
all the
on
big
these
three
estimates,
manufacturers, but
which are
we
from
also talk
last
to every
year,
broker
and
in the
they don't
industry.
report their
And
power
whenever
price.
there's
You
an
have to back it
attractive
out using a lot of data
immediate
in their
delivery
10Q.
deal,
So based on
we
their
pull the
implied
trigger.
power
That's
cost
why
in
you'll notice we
2023,
did
their hash cost is
7,000 machines,
$41
another
per petahash
1,000,
per
another
day.
1,000, another 500
And right
machines
now, hash
just for the
price
halving
is
in the last 6 months.
$42.9
Thank you very much for your perspective.
per petahash per day.
Wish you best of luck.
So you're
in your
basically
quarter.
looking at a buck profit
Thank
per
you.
petahash based on their current fleet efficiency. And again, that
Thank you. We go next
implied
now
power
to
rate.
Mike Grondal of Northland Capital
And that
Markets.
power rate could be much lower than what it was.
Hey guys, thanks. I just wanted to follow
Because
up on the HPC
a lot of this is
strategy.
seasonal. It's based
How
on
have
what the price of their
demand
power is
been
for that
from
given quarter across
customers,
all these different sites.
and what type of customers have you talked to regarding the 20 megawatts?
So the 20 megawatt is first and foremost an infrastructure project for us.
That's a cool question.
And as we work to build that out, typically larger customers like to see the project.
This is related to
underway before
HPC
you
load.
start negotiating pre-leases. So what we've been doing is focus on getting scheduling down. So customers who are wanting compute to come online will want to know when they can expect that compute to come online. And because there are so many new iterations of NVIDIA hardware, the engineering procurement exercise I alluded to earlier, you kind of have to have, it's like matching two puzzle pieces to make sure they're the right fit. So the data center capacities are going to be air-cooled, it's going to be liquid-cooled. Next generation stuff will likely be liquid-cooled, if not all liquid-cooled. And then are you going to be working with Blackwell, H200, et cetera? So we'll be able to provide more color on that as we provide more announcements, but that's just the methodology of the process that you go through when you're doing these larger build-outs. I hope that's helpful.
Yeah, sure.
I want to
And
earmark
then
this,
secondly,
or bookmark it. This is, I think, this is an important to kind of expand on at the end of the stream about different HPC strategies and how these miners are kind of approaching it in different ways.
So we hit our $10 million ARR for AI revenue this quarter, which I'm very proud of our team for realizing that milestone, which we had broadcast previously. Our target for H2 this year is 20 million of ARR. So that is one target, and that's working with bringing more GPUs in our cloud business online. The other target is to have both Paraguay construction underway and the 30 megawatt conversion into 20 megawatts of HPC underway. So the completion of the latter two infrastructure projects will fall into 2025, of course, but to have those projects broken ground would be a goal that we would be very pleased with this year.
Hey, that's great. Thank you.
Great question. Thank you for asking.
I would just like to oh, sorry. I was just going to try, it's Frank here, to add some color to what Aiden is saying, is that when people make these announcements from crypto mining that all of a sudden they're going to HPC, it's very, very complex. And it's much more complex than I ever expected. But what Aiden is saying is that we've hit 10 million. That's basically the same team that's been building that out and repurposing those chips. So that's a heck of an accomplishment because that's almost like free cash flow, what it throws off. And what we're finding is that when we
I
go
just want to point
like,
out
order
that 10 million
Blackwells,
figure
et cetera,
is extrapolated annualized
the
recurring
cost,
revenue based on
the
last quarter's
engineering is
HPC.
much different. It's much.
This is
They're building a
2.6.
brain, and
They're assuming
it's
after,
like a
4
bunch of
quarters,
neurosurgeons are
you
brought
would
into
have
the
just
room.
over 10 million in
The
revenue.
engineers at the beginning just don't believe how much energy is going to be consumed. How heavy is the steel infrastructure to hold up these Blackwell servers? There's a litany of complexity that goes into these expansions. So one of the things which we said is that we have 6 megawatts of electricity in Bowdoin. We own the land, we own the facility. Let's start. It's a military
Is
town.
the name of that site
Let's
literally
start right away
Bowdoin, or
there.
am I mishearing
And then
that?
we
Like
said, hey,
Geo
in New
Bowdoin.
Brunswick, we have this additional
It's not
electricity
spelled the same way,
we
but
have
yeah.
ability to.
Okay,
We
gotcha.
It's
have
literally
variable and we
Bowdoin,
have fixed.
Switzerland,
And
yeah.
let's take
Okay.
a portion of the fixed.
Or sorry, Bowdoin, Sweden, excuse me.
And as we're in that journey of getting the engineering, et cetera, and we're discussing with NVIDIA these various chips,
It's
all
spelled
of a
the same
sudden
way
it
as
becomes
Dioba.
that we're in conversation with NVIDIA engineers.
Next thing you
that
know, there's
we
going to
have
be like a
rethink
Trimp,
the
Iceland or
structure,
something.
the building. Do you need reinforcement? Do you need this or that? So it is phenomenally fascinating, but it's
So
much
this is a
more
really
challenging
important point
than
that
what
Frank is
people
making.
think.
I just want to
But what's
highlight.
sweet about it
You can't
is
just
that
go into a
you could be
Bitcoin mine
making
and throw
$4 an
GPUs into
hour
the racks
versus 15
and
cents
plug them
Bitcoin
in and
mining.
expect
That's
everything to
the
go
real big
perfectly.
difference that when you
You
look
have
at the
to
business.
build backup power and redundancies that Bitcoin mines typically don't have. You have to have a
Thank you. We'll go
magnitude
next now to Bill
greater
Papanastasiou at Stifel.
cooling apparatus.
Good evening, gentlemen. Thanks
And
for
you
taking my
also have to
question.
have
For my
generally,
first one, I was hoping you'd be able to share your
more
outlook for
power
the Bitcoin mining
per
landscape
computing unit
and how
than
that
the Bitcoin
plays
miner.
into your philosophy to scale operations going forward as you look to double the hash rate capacity here with Paraguay.
Well, we have always tried to utilize cash flow from the business to grow the business. And of course, adhere to the green energy mandate, which makes it a lot tougher. I mean, there was a lot of opportunities we've looked at. We could have gone nuclear. We could have just gone grid mix. And, even within the realm of renewable energy, we did look at some interesting opportunities in the U.S. where you could have gotten 2.5 cent power, but then you're spending $2 million a megawatt getting on the energy production side, contributing to the capex of the solar farm. When you look at those ROIs, they really start to stretch out.
That's another
very
thing.
long, and it doesn't make economic sense. And
depending
getting
on
back to
where
the
you're
three
building
pillars of
and
why
how
I think
efficient you
Paraguay
are,
is
you
such
can get a Bitcoin mine
home
off
run
the
is
ground.
because you have the
What do
dollar per
you could tell me
megawatt
this, Charlie. Like I've
to
heard
build out.
sometimes as much like
the
300,000
electricity
lean,
costs. We'll be probably more
maybe $500,000 to $1 million. If you're a little,
Tom
and then of course the
Koonslet,
green
I think
energy at
their
scale. Now,
cost per
of
megawatt
course,
was under
to do
200.
a
I think it was
100
like
megawatt
150.
site, that will require
right? That's
capital,
incredible.
but this
I mean, but if you go over $1 million, that's like that's
a
pricey,
million's
right?
too high.
So
yeah,
we're excited
300,
for HPC,
300
it's like
I believe is like a good industry median.
Okay. And
Appreciate
for
the color
reference,
there.
I've seen people
Just shifting
in the
gears to the
HPC space
GPU
quote
as a
10 to
service
15
business.
million a megawatt.
How are you
Like,
seeing
that's
or assessing the sustainability of prevailing market compute prices for the GPU hardware that
it's pretty
Hive
crazy to
has
think
in
about it,
its
though.
fleet over the next 12 to 24 months? And can you share some more color on
Like
utilization
10
rates?
magnitude
Thank you.
greater.
Yeah, that's a good question. Like with all technology, whether it's your home computer, your iPhone, ASIC miner for Bitcoin, or an NVIDIA GPU, they all have economic life cycles, right? And really, the A100, right, the Ampere series, was still in use and is still in use and is still considered very viable. And the H100 came out, the Hopper architecture. And so what happened was people were paying a premium for the Hopper architecture, but they would still pay a lower amount to get compute using the A100. When the Blackwell comes out, we'll have the same effect. So I would say, if you use a melting ice cube analogy, the hourly rate for GPUs melts at a much slower rate than Bitcoin mining ASICs, right? And I think that a big part of being able to be a true player in this space that we haven't really touched on yet on this call, so your question is a good one because it brings it to light, is uptime, right? So in crypto mining, when you look at the Bitcoin per exahash, Hive is usually in the top 3 consistently, not usually, but consistently. And, we're talking 98, 99% uptime. And that's a home run in crypto mining. And then, some of the peers are like 95%, 90% uptime. There's no room for 90% uptime in AI, right? Like, tier 3 is, 99.998% uptime. So I think what the aspiring crypto miners that want to get into this sector will wrestle with is delivering that uptime for people that want to train foundational models or do fine tuning. And, we've done a lot of that. We used to run 120,000 GPUs in the ETH mining era, and we've grown our AI compute revenue from 1 million
another
to
really
10
good
million
point.
ARR in the last year and a half. We've been
Bitcoin mining
building
goes down,
on our
like Riot,
pedigree
Corsicana, or
operating
Whinstone.
GPUs.
Okay.
And
Riot doesn't make
we do
money,
a
but
ton of
the
stuff on the
Bitcoin network's
R&D
fine.
side,
Maybe blocks,
looking
if
at
enough
fine-tuning
miners
data
do it,
sets, et cetera.
heat
So
in Texas in the
making
summer,
sure
blocks
that
are a little bit
we
slower.
work with
But
researchers
nothing
that they
bad
have a
happened.
good
If one of these
user experience,
data centers
because
goes down,
you do have a user, right? You're not just
people
submitting hashes
can't
to the
access
Bitcoin
maybe
network,
essential goods and
and if your
services
server
online,
gets
right?
disconnected,
And that
reboots,
a
and
tier
then it
3
tries
data center
again.
like Hive is trying to
So I
build
think the
can only
key is
have
good
1.6
uptime
hours
and
of
good
downtime,
user experience will allow
which is
you
pretty
to
crazy.
realize those long-term contracts. Because once you sign a contract for a year or two, what have you, you've got to deliver. There's SLA, service level performance requirements, and we're seeing long-term
Yeah, like
contracts
if you go down and you've got an
roughly in the
SLA, you could lose that
$2.50
deal.
per hour range. Some
Yes.
Whereas
some
Bitcoin, you
2.20.
you
It's
go
always
down, you just burn
negotiation,
money.
right?
You can turn
So I
back
hope
on.
that
Right.
answers the question.
If you're self-mining, you burn money. If you're hosting for someone, maybe they get you. But you can also kind of be like, okay, then take them out of the facility and violate your hosting agreement, and then go find another host who's also probably going to have downtime.
Yeah, I just want to thank my whole team. As Frank pointed out, we function across 9 time zones. We are the longest standing crypto miner. We used to mine Ethereum. That business did $150,000 a day. It was a 90% profit margin business. And we never got a premium for it. Instead, we always contended with the FUD, fear, uncertainty, and doubt, that the merge was coming. And then when the merge came, we pivoted. And we started mining altcoins with the GPUs, and then we started reversing some GPUs for HPC compute. This is now Hive's second Bitcoin halving event. And as Darcy pointed out, we've got 150 million of green and clean Bitcoin on the balance sheet, unlevered, unencumbered. We've not taken on any debt to purchase ASICs. So I think that we really
do people care about this anymore?
Class performer,
I mean,
but when you look at the comp table,
especially if we get a red sweep in the elections this year.
So
not saying we're going to, but if we do,
thank you so much.
I don't see how ESG stuff is going to be relevant over the next few years.
I think that we really just focus on pound for
I
pound.
feel like it's not even that relevant now.
The economics. We realize scale is important. That's why I've been telling people, we know the market doesn't care about 5 to 6 exahash. That's why we said, okay, we need to go from 5 to 10 to 15. So stay tuned. And I think it's going to be an exciting year ahead. We always see that bull market come about 9 to 12 months after the halving, if history is any indication, which it usually is. Thank you, everybody.
Thank you, Mr. Killick. Ladies and gentlemen, that will conclude the Hive Q1 earnings conference call. Again, thanks so much for joining us, everyone, and we wish you all a great evening. Goodbye. Thank you, Mr. Killick. Ladies and gentlemen, that will conclude the Hive Q1 earnings conference call.
All
Again,
right.
Thanks so much for joining us.
All right. So we
What are
had
your takeaways?
my takeaways, my backup, I don't sit in on a lot of earnings calls, Colin. So like I didn't know what to expect. I thought, I was comparing our last ones where I was like, okay, those are kind of boring. Like maybe I've had something to pass the time, but this one there was something for my monkey brain to consume, changing slides. Yeah, I don't have a whole lot of insights except this is the first earnings call where we saw after hours trading of the asset go up time.
Yes. Which is interesting. I wonder what the market is reacting to there. What was said there that everyone is like so juiced about? You know?
Yeah.
Is it the AI stuff? Did people perk up at the thought of selling a kilowatt hour for 25, 50 cents when you're buying it for like 5? I mean, they actually won't be buying it for 5 at that point. They'll probably end up having more expensive electricity down the road if they try to really bootstrap these AI data centers. But I could be talking about my ass. I don't know if that's true, but I've been told by people in the know that these data centers typically have higher price points on the energy they pay for because they just need so damn much of it all the time. Yeah, I don't really have too many takeaways either, other than like, I think that with a lot of these miners looking into AI, every question that gets answered leaves 5 more in its place. Because I think that even more than Bitcoin mining, AI compute and compute markets are just very abstract to people. High performance compute or compute markets in general preceding them already being very opaque, something and esoteric. People don't have any idea how these markets function. AI is still super new in terms of the kind of compute that powers things like ChatGPT and the large language models. So I think for me, just and I kind of iterated it. I spoke about this on one of our former live streams, and I'm going to reiterate it here. One of my bigger projects as a journalist over the next year and going forward is going to be figuring out just how these HPC and AI markets work. I know very clearly how Bitcoin miners sell their hash rate. They either deliver it to the network and they get paid out, based on their luck for that hash rate, or they go to a pool and they are paid out a market rate for that hash rate based on hash price, based on whatever hash price index that mining pool uses. Hash rate is more or less the same, right? Like, as long as your shares are not getting rejected all the time, like your machine is as good as anyone else's machine if it's delivering constant hash rate to the network or to a pool. Other compute's not like that. I don't know what differentiates 20 megawatts in a place like Hive's Boden, Sweden center versus like a gigawatt in a Amazon Web Services data center. But there's clearly got to be a difference between those two services, right? So I think the biggest and I think one of the most important things to keep an eye on going forward is like, how liquid are these compute clusters for these miners, and how easy will it be for them to find business? Probably not that hard, but it's just something that I don't know. And it seems like such a kind of brave new world when you think about the fact that these Bitcoin miners are huge fishes in a very small pond, and they are jumping into an ocean where the biggest players are not just sharks, they're megalodons.
Yeah.
Right.
Where because what's funny is like in the Bitcoin narrative, there's all this gamification of like nation state, this nation state, that, which I do think is directionally right. But if you think about what, to me, I would imagine that governments, when thinking about an AI and HPC strategy, this is very much on the radar. They understand that these are arguably the direction that global power and power projection, if I even want to borrow or reference the Jason Lowery thesis, that is, they understand that. And so you think about the amount of money and what is it, $9 trillion towards a single company on an abstract idea with Sam Altman at the helm. And then you look at the entirety of all capital raised for Bitcoin mining, and I don't think it approaches. So
OpenAI has raised $9 trillion.
It's might be valued at that. Well,
is that? I have to Google this. I'm gonna fact check my boy here. OpenAI chief pursues investors, including the UAE, for a project possibly requiring up to $7 trillion. So I see it.
Yeah, something like that.
But to your point, though,
yeah,
if that's true, if that ends up happening, that's insane.
Yeah.
I mean, that's the combined market cap of Microsoft, Apple, Nvidia, and Amazon.
Yeah.
Right? Which, you know, makes sense if AI is going where everyone thinks it's going to go. This is the most important technology since the internet. So you're going to just see insane amounts of capital flow into it.
And it
really does make Bitcoin mining seem kind of like superfluous in a way, right?
Yeah.
Maybe this is a good thing. Maybe this will force miners to go back into guerrilla mode, and we can disintermediate some of the how should we say it, corporate finance fuckery that has kind of consolidated the mining industry in a way that no one really talks about. I mean, we talk about it, and everyone every now and then is like, whoa, isn't that crazy? But it's like this sword of Damocles hanging over everyone's head, or the hash of Damocles, if you will. And everyone's kind of just waiting for it to drop.
Well, I mean, a lot of people talk about, if we're going to just keep riffing on the AI topic, I mean, we talk about Bitcoin miners as energy buyers of last resort. It could also be, you could also say they're just compute providers of last resort. Or maybe
AI miners or Bitcoin miners?
Bitcoin mining when integrated with all of the types of AI and HPC. It provides, you could say, a base load. Then you might be able to construct more complex agreements and deals, power purchasing agreements. Again, it's really hard for me to talk about because I've spent the past several years Bitcoin mining and not AI or HPC, and that's why I try to like talk too much out of my ass about it, because I'm kind of sitting on my hands watching, trying to figure out which mental models are useful. Because a lot of people think they've got strong mental models, and I don't think so. Even among the I would say like even like among Bitcoin mining, like there's a lot of us who have different opinions about what's the best strategy, but we all have pretty good like mental models about like directionality, structure of the industry. But in AI, you have radically different, even directly competing views on how AI compute.
Yeah, and you have a bunch of different strategies to your point, and I try not to speak about AI and HPC with regards to these Bitcoin miners outside of what I've either read from their own disclosures or for what I've heard from professional miners and people who work in the HPC space with regards to how a lot of this works. And going back to what you just said, you know, I think that all those different approaches are going to be exposed or kind of venerated over the next, you know, however many years this is going to take to sort out. But I find it very fascinating that you can have everything run the gamut from, you know, Core Scientific's original plan to basically lease a data center, a tier 3 data center in Austin for HPC to its other clients. And they're kind of like, it's like a middleman, right? Like you're basically just kind of a broker for power at that point in a way, and for compute flows. But now they're kind of going a completely different route where they're going to retrofit one of their 100 megawatt data centers to provide 70 megawatts of compute to CoreWeave, which is very similar, obviously, to what Hive is stating it wants to do with its Bode in Sweden, with its Bode in Sweden site. Yeah, and I have no idea. You know, it's just I have no idea. To your point, what are the mental models here? What's actually going to work? Because I mean, we're still in the early innings of Bitcoin mining at an industrial scale. Like we still have people arguing over whether or not they think water or immersion is going to be the future of Bitcoin mining, or whether it's always going to be air cool, you know, or whether or not off grid is good, or whether or not, like, you know, different PPAs are worth taking on.
Yeah, well, exactly. And maybe there are industry insiders in the AI HPC compute world who understand like a lot of those things, but I get the feeling that there's not a lot. Whereas, like, I'm like, oh, I can make arguments for both the water cooled and liquid cooled ASIC perspectives, and I have an opinion which I think is well informed. But like, yeah, I mean, but I also don't think they necessarily directly compete. Whereas I see some of these ideas of AI and HPC as directly eating. You have this idea of the supercluster, geographic supercluster, or does HPC need to be? Is it geographic? Graphically distributed? How important is it that it's near city centers? Like latency, those kind of things. Training language models is like, it's not clear to me that we're just going to be training language models, which can happen over here somewhere across the world. Where does that compute need to be just because of the speed of light geographically.
Right.
And so I think, you can think about these things in mining, because I'm like, well, until maybe the argument for mining is like, well, until nation states get in, that really like changes the on-off decisions of a Bitcoin miner, less related to actual like profitability as a private company and more related to the nation state. Beyond that, like I don't know, like if you have huge inversions coming on the mining space. Whereas to me, we sit at multiple crossroads ahead of us for. Except one thing is true. One thing which we do know is that it will continue to grow in an order of magnitude every X number.
Right. I can't help but wonder if like the gold rush for AI compute and the need for additional electricity and energy, because we don't have nearly enough in the US to service our AI goals over the next few decades, right? Like I've seen, figures that say we're gonna have to like double what we already currently produce if we want to remain a leader in the AI space. So it makes me wonder, like, if that's true and we actually end up getting to that point where we build, more nuclear and more base load, stuff like that, is that going to push Bitcoin miners to the fringes? Like, it almost seems like you're going to have a dynamic where the only miners who are going to be able to be competitive are those who move towards stranded energy, energy on the fringes, energy that is wasted, things like that, where like you're going to have to find a very clear edge in an energy market that these data centers cannot tap, because otherwise you're going to have so much capital flooding into this to where, no one's going to want to bootstrap your data. No one's going to want to give you money to bootstrap a Bitcoin mine if they can pour money into a high growth AI startup, right?
It's Brandon Quittam's Bitcoin is a pioneer species theory, where mining is the pioneer species of energy development. I could totally see that. Yeah, that makes sense to me.
Maybe it'd be a good thing. Again, like these mega mines kind of make me, I don't know, man. I like, it's cool, but like I've entered some of them and I just have this feeling it's like this doesn't feel right. And I'm not a communist. I'm not saying we should go seize all of Core Scientific's rigs or anything. But there is a part of me that thinks like, man, this is so much less badass than like some dude running like 20
bit axes,
GPUs in his basement, or like going out into the middle of like the wilderness in Appalachia, finding an abandoned well, slapping a Jenny on it, and running like 3 WhatsMiner M20 series,
and like brewing some white lightning in the process.
Yeah, exactly. I mean, obviously, it's good that we have, it's in a lot of ways, it's good we have these large scale miners for deterrence against certain attacks on Bitcoin. It's good in some ways that we can have large scale miners provide flexibility for the grid, but the same dynamic has also given way to a sort of centralization, both on the proxy pool level and on the public miner level, to where now there's a very real choke point for the government to do things with the Bitcoin network that they wouldn't have been able to do, 5 years ago. And I'm not talking about 51% attacks. I feel like everyone always goes to the 51% attack, but it's really censorship is the more, I think, likely and in some ways more damaging long-term threat that a lot of this hash rate concentration poses. Do we have a question in the corner there?
I don't think we have a question. I have a question somewhere.
No comment?
I didn't have as many we didn't have as much comments this time because I wanted to try to limit the amount of windows I was picking.
But we'll try to be a little bit better about division of labor for the next one, because the troll box is always popping off.
Next earnings report, we're gonna have a lot more bells and whistles. We'll have some surprise sounds, but maybe if one of us makes a joke, we could get one of those. Otherwise, Colin, I feel like we've done
almost an hour and 30 minutes here, so I think we can kind of wrap up. Do you have any final thoughts on anything, not just related to Hive? Because
I've always got opinion. Shout out Aiden, shout out the gang. Hive really cleaned up with the ETH mining. I like that type of asymmetric bet, and I like that type of that's pretty ballsy, especially in face of
It
merge.
is,
And
yeah.
he did shout that out a few times, and he referenced the fact they were able to add all this HPC AI with a similar theme to the one that they built the mining with, and that's really no small feat because they're just very different. They require different types of skills. So I like to see that. Just confirms to me that Bitcoin mining is still the most interesting business.
Out of all the businesses.
Out of all the industry. Yeah. Anyway, but we're going to cover those here on the Mining Pod. That's why you need to make sure you like and subscribe. If you're watching on YouTube, hit subscribe.
Smash that subscribe.
Hit the little bell so you get notified anytime we go live or post a video. If you're on Twitter, if you feel so inclined, also hit the bell to get notified. But also look to our Twitter account. We will regularly push and notify you when we're going to go live. We like this format. We think you guys like this format. We're going to figure out exactly how best to run this format. Do we talk over the podcast? Do we talk over the earnings call? Do we not talk over it? So how much time? How much audience participation do we have? So.
Yeah, and if there's any if there are any miners that y'all want to see in particular, if there are any comments or suggestions for how to improve this, if there's anything we can be doing to improve this experience, please let us know. We're going to start doing this quarterly for as many miners as we can. For the major ones, probably like top 10 by market cap. As long as the cadence makes sense and we're not just too overwhelmed, we're going to try to do this with as many as possible. We're not picking favorites here. Cleanspark, Core, and Hive just happen to be the ones that we got around to. We would have loved to have done it for Mara and Riot and Bitfarms as well, but we're going to be looking at some of the other ones that should be releasing their numbers within the next week or so. So be on the lookout for any more announcements for these live streams because they're pretty fun. And, maybe next time Charlie will get up there and play Fall Guys so that we could just have even more sensory experience. It's like ASMR on steroids, except there's not really anything relaxing about it,
Yep, exactly. For you, Bitcoin mining stock degens, we're going to really ramp up the serotonin. So, yeah, anyway, I think I'm going to wrap this up, Colin.
That sounds good to me, Charlie. As a quick sign off, please go like and subscribe. Blockspace on YouTube. Go follow us on Twitter, Blockspace Media, and subscribe to our newsletters, the Mining Pod newsletter and Bitcoin Season 2 newsletter. Subscribe to Bitcoin Season 2 podcast and The Gwart Show. We love y'all. Peace.
Bye.
Much love, mining fam.